Hey everybody, it's Erik Torenberg, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts. Hey everybody, welcome to another episode of Village Global's Venture Stories. I'm here today joined by two very special guests, Alex Chee and Jake Ellowitz. Alex and Jake help run product and engineering at Tribe Capital as it intersects across the entire firm, from co-investing to helping support companies to helping LPs. Alex, Jake, welcome to the podcast.
Yeah, thanks very much, Erik. Really appreciate you having us on.
So I've been a big fan of Tribe Capital for a long time. I believe you've just celebrated your 2-year birthday, so congratulations. And we've had some of the partners on the show. And so excited to go deeper on sort of how product engineering can really innovate within venture capital. How would you describe what is the superpower that Tribe Capital has, or what sort of makes it sort of distinctly unique? And then I want to get to how you two contribute to that.
Yeah, I actually think there's a pretty interesting way to kick this off. And that is actually to ask you a question, Erik. What do you think everybody thinks we do? And I'll give you a hint, right? Like we've done 2 podcasts on your segment here. They were called using data in venture capital and data informed investing.
Yeah, so I would think that you would leverage better data sources to either source companies, evaluate companies, and or support companies in ways that other firms perhaps do it more in a craftsman-like way.
Yeah, that's absolutely right. And as you said, we had our 2-year birthday actually just at the end of last month. And through that time, we've sort of iterated on how we describe what we do, because it's somewhat amorphous when you're first getting into it, just like any new startup. But one of the questions that I get quite a bit, in fact, I've gotten this quite a few times in the last few weeks, is how do I make my own institution more data oriented? Right? I get this from sort of hedge funds that are trying to enter into the private markets. I get this from family offices who are realizing they're overexposed to sort of the family businesses who want to enter into venture. And ultimately what we end up telling them, and this is funny given the title of some of these other podcasts, is you're thinking about the wrong question. It's not about necessarily being data oriented. Now, I think, this is something that's easy to wrap your head around, and it's easy to wrap your head around because the truth is everybody uses data in venture. Right. And everybody uses it across sourcing, evaluation, managing companies. And so really the statement ends up being quite empty. And I think it's not a great way to describe what we do. And so, what Jake and I primarily do is think about what that actual edge is internally. And I think if you look across sort of the history, I guess, of all corporations, right, what you end up seeing is we believe, the largest ones are the ones that align in a lot of ways with the investment philosophy that we have now, right? Which is, they're the companies that have been able to find product market fit early on in their life cycles in such a way that each unit of that fit ends up resulting in sort of this wide universe of possibilities on top. And the largest of these are the ones where entire ecosystems are built on that initial product market fit. So inevitably, what we end up doing at Tribe, and I think what's an interesting topic for today, is even for those guys who say, hey, I want to be more data oriented, really the right question to ask is, there are these new shiny toys out here, data, etc. But has sufficient time elapsed in our industry or sector such that we should rethink the way our organizations run all the way through the diligence and the way in which we think about companies? And use a product-oriented mindset, an engineering-oriented mindset to essentially re-engineer the entire thing from the ground up. And so, Jake, myself, the rest of the team, that's what we end up spending a fair amount of time doing. And it's actually a part of our investment thesis when it comes to investing in companies, because we believe that brings out the most multiplicative compounding effects.
Yeah, I think just kind of adding a little color to that is, and this is a theme that's happened not just in venture, it's kind of across many industries, where people are starting to utilize data, right? People say, oh, I have so much data now, and I have so many things I can do with that data, I must do something. And the trap there is that the data itself and the analysis is not an outcome, it has to start with kind of what are the problems you're trying to solve, and then how can you, back from there. I think data is like 2 or 3 steps. Like, okay, what are we going to do with data away from that? And I think, the iteration process about discovering what you should do is very, very important. I think that's something that we spend a lot of time on figuring out how we want to do that at Tribe.
And why don't you walk us through sort of how it's evolved over time a bit?
Yeah, sure. I met Jake over at Social Capital, run by this gentleman named Chee early Facebook exec. Part of the reason, I'll let Jake speak for himself, but part of the reason why I joined, and I was first product hire there, was the idea of merging product engineering and venture seemed fairly novel at the time. And frankly, like the opportunity I was presented was, hey, why not try and figure this out? Right. And, having been on the other side of the table of having founded companies and such, I knew there were certain things that I had struggled with, specifically sort of I think investors have historically done a great job of connecting you into like a strategic network of helping you understand insights within your data that you wouldn't otherwise understand, helping you connect the dots. But if you look back in the last 10 years, a lot of that exploration has been based on whatever information you give your investors. That's a hard process when you're living through what I would describe as the struggle as an entrepreneur. And so coming on in, I realized, hey, this is potentially a way for us to sort of re-examine some of those challenges and rethink the way in which we interface with companies, provide value to them, etc. Now, I'll be frank, like when I came in, we didn't know what we were going to focus on. In fact, we had the exact same answer that you had in the beginning, which was, hey, can we use data in the same way we did as operators to help us source companies, manage companies, evaluate companies, essentially that whole life cycle. I just distinctly remember thinking to myself, my God, I'm one product guy here. There's a huge amount of surface area here. I'm not even talking about the operations portion of running a firm. And thinking when Jake, started talking to us, thinking, wow, like Jake has this uncanny ability to deconstruct the space and start to think about the interdependencies, and he might be able to help us take a product-based approach to thinking through this. That is, figuring out what the right focus is here to leverage the least amount of energy to build the largest outcome. We actually ended up trying a lot of those different things. In fact, when we have conversations with people externally, they often think that we focus the majority of our data work on sourcing. And I think this is actually a great example of why you need to rethink the entire stack from the ground up if you really want to make a material change. And that is, there are reasons why people think of sourcing in venture and management of companies when they think about data. And the reason is, in a lot of cases, what you have is a highly successful firm that's lasted for the last 10, 20 years. They have significant momentum in the way in which they operate, right? It's usually around network or the way in which their investment committee and that core evaluation works. And when you pull in engineers who haven't had access to this type of environment, what they inevitably end up doing is thinking, hey, what are the easiest interfaces into this moving mass, right? How can I be the connective tissue in? And the answer ends up being the easiest points of entry are at the beginning of the process and at the end of the process. And we've seen this with some of the other earlier attempts, including ourselves, right? Where we will put in the top of funnel so that the investment team could look at it. We would tinker with sort of the evaluation part, but that was difficult given we had to mesh that with the existing investment committee and how they worked. And then at the end, right, it was easier for that team to then pass back that work to us and sort of manage the portfolio. I think you could see that in the way the firm was organized. And I think it was a great first shot. Huge props to Chee for designing that. And we were actually able to get quite far. But I would also say, there were a fair number of distractions, and it was fairly difficult to find that one thing that we could focus on that would provide those compounding returns. And so,
yeah, and I think just kind of adding to that, these things definitely take time and iteration. And that first, crack at Social Capital was really instrumental. It's hard, we can only speculate if we all remain there, how we would have evolved everything. But we definitely learned a lot of what Alex is talking about. In particular, there are people who are basically incentivized on kind of the deal selection side, right? And then there's engineers. How are engineers incentivized? And then there's how do you, and then there's on the other side, data scientists and everything. And then how do you incentivize innovation from a product and frameworks perspective with these new ideas versus, a little outside of the box to actually come into motion and make and have lots of progress on that front. I think that was one of our lessons too with social capital, where while there was, this growing product and engineering team, and that, in a way it was very, very innovative. One of the lessons was when you're not on the line to make the call, it's very different when you're coming up with the framework, implementing the framework, or building a system. And I think, when we came together at Tribe Capital, that was one of the things that we took with us, which was, what if we change the incentive structure so that, the person who's designing the system and the person who's coming up with the framework out of left field has their neck on the line for that. I think that, you end up with a bit of a different approach, a different framework, and you have a little more flexibility. And that's kind of one of the things that I would say was kind of where we had iterated on some of the learnings from social capital.
Totally. Let's get into the meat here. You talk about the atomic unit and the core product efforts that support it, like 8Ball and Allspark.
Yeah, absolutely. So I think it's important to start with sort of what the core philosophy is around sort of product and focus. Right? I think, and we actually, as I said earlier, we use this in our own investment philosophy as well. Like when we see a company that has been able to build early stage product market fit in something that can evolve into many things, that's the most exciting, right? Versus sort of a company that is incredibly widespread, may have sort of mediocre product market fit across, can't really give rise to anything. And I think the problem is you're always constrained by resources, at least especially in the earlier stages. And so how can you get the biggest bang for the buck? And our underwriting frameworks are based around this specifically, right? Like our 8Ball, as you describe it, that's our mechanism for, as I would describe it, viewing the current state of a company, a medical chart, so to say, with high precision and very quickly. We use that and then layer on top sort of these 10x, 100x frameworks that allow us to see whether or not that early product market fit sort of extends into other avenues, right? Other products, other compounding effects on top of that early effort. And I think, we essentially took that same framework and looked within ourselves to try and understand, hey, historically we've focused on a lot of different things, sourcing, valuation, management. Is there a single thing we can focus on at the start of Tribe that will build the most compounding effects? It's not data, because data is too broad, but what is that thing? And for us, the answer ended up being that 8Ball. To me, it is, again, how do you get to ground truth about a company, its current state as well as its past, as fast as possible, so that you can then layer in all these other theses on top, or all of these other network effects. When I joined, that was sort of the loon shot that was given to me was, look, it seems inevitable that if there was a firm that, given any company, could immediately give you back that ground truth, cut through all the bias that's in there, both in terms of memos, but also in terms of the materials the company has to rush to give you, that would be invaluable. In fact, every single LP would want that. Everybody in the public and private markets would want that. All companies would value that because they can offset some of their engineering time to get ground truth and get another perspective that's accurate. Essentially, we took that insight and we built the team around building that at this juncture, right? And essentially starting to explore the adjacencies that come out of that. Jake runs the 8Ball and Allspark, so I'd love to pass it to him to talk a little bit more about what we've been doing there.
Yeah, I think that's a good overview. One of the things about the 8Ball, just because this is a thing that we're very familiar with, it's a data analysis based on raw product data that we share back with the entrepreneur. And all these frameworks we've published them and everything, so this, they're relatively out there. the thing that I think is really valuable there, it's not that we did a data analysis, not that we can do it quickly, accurately, and visualize it well. I think that one of the things that, because a lot of entrepreneurs will already have their cohorts understood and have, their customer concentration or their growth and all that. But when we bring the 8-ball to an entrepreneur, we're also coming with the interpretation. It's about the discussion. I think there's an analogy here when Alex used the word clinical. A doctor might have a ton of information about a patient, and then what they do to make it valuable is they figure out what matters so that the patient can make an informed decision. I think that's a lot of what we do in an 8-ball. As you can see, that's not actually data. Like data, yes, it helps us get there. It helps us get there quickly, cut out biases and make it more objective and all that stuff. That's all great. But the real value is actually this other stuff. In terms of the product experience for an entrepreneur, is this easy, fast? Did I learn something? Are these people that I think I'd want to keep in touch with because they help me understand my product in a way that I might not have seen it, on my own? And, I know lots of VCs are out there and lots of VCs are doing all sorts of valuable things. This is kind of our approach. And the way that we use this approach internally is, how do we make this better for everybody? How do we make ourselves smarter around this framework and make it better and smarter over time? I think that's a little more color there.
Yeah, and I want to echo what Jake said here, right? And actually the same thing holds for the people that we end up working with, because essentially what happens is we are enabled to build that interpretation on top of that ground truth. And in the same way, what we found is by sharing that same interpretation out when possible, the other firms in the space that are innovative in other areas, whether it's, again, like network, whether it's strategic capital from somewhere, they are able to then multiply their efforts based on, I guess, this backbone, you could call it. And so I think, we consider ourselves fortunate having worked through several years of not only focusing on this to realize, hey, there are a lot of effects that come from focusing on this, and being able to not only do that internally, but share that abroad as well.
Totally. And so, firms have tried to innovate on sourcing, on diligencing, on supporting. Would you say that you're having the most traction on sort of the intersection between supporting and then somewhat of diligencing? Or how would you say you sort of look at all those three things in terms of the way that data and products can really help in venture?
I think for us, we have, this is a tricky question because, it's one of these things. How do you know where the impact is? I think where where we've made our biggest bet historically, it was on evaluation. The thing with evaluation, though, is it's hard for us to say, did we pick well, right? It's hard for us to say how much innovation we had on evaluation actually flowed through our returns if actually it's in the support side. But that's kind of where I think we started with a lot of this. Actually, a lot of this started with supporting, and it went back into evaluation and then went back into supporting. So maybe I can just give a little history, and that might be helpful, where these frameworks originated from co-founder at Tribe Capital, Jonathan Su, sitting in social capital portfolio companies, helping them understand their product traction. And that's where the first learning was, hey, this is really useful. Maybe we should do this before we invest in a company. But now we're finding that working with companies to help them at their inflection points, working closely with the finance and product teams, just to helping them understand their traction at the most crucial times in their development is actually turning out to be pretty important.
Totally. Let's talk about some of the other products that you have. Maybe talk a little bit about Loon Shots or First Look.
Yeah, absolutely. So I think this is actually First Look is a great example of what it means to deploy sort of a product orientation to the way in which you think about building things. So for context, First Look is our co-invest program in-house. In fact, I'd say we broadly have two products, right? We have a fund, which is sort of earlier stage, highly managed, and then we have a co-invest product that frankly grew organically out of our early stage investing practice. And what we found was a lot of the same frameworks for early stage product market fit, i.e. the 8-ball, as well as the frameworks on top of that, they ended up applying to later stage companies as well, right? It helped us reduce our loss ratios and such. And so we engineered a new format. And I'd say like co-invest vehicles are not a new thing. But what we ended up doing was also saying, hey, look, like, is there a way for us to rethink the way in which we structure these as well, so that there is further alignment and we get more of these compounding effects? And ultimately, what we've built recently is a way for us to align those vehicles with our fund. And so how that works is these first look vehicles, they invest deal by deal into companies. Often when we have partners / we want to expose an opportunity that doesn't fit into the fund to those partners, we think it's a great deal. It's a slightly different product. And we'll actually realign it into the fund by essentially having the fund act as the GP and get the carried interest from there and flow into that. And so in that way, again, like the major point here is, in the end, like, there is a core focus that we have that is sort of understanding these companies and extrapolating the 10x, 100x. And we're orienting all these products around trying to understand, hey, if we do these things, how can we multiply the overall effect? And that program's been wildly successful. There are tertiary effects as well that come from running a program like this. I personally run this program, and a lot of times what I'm able to do is iterate on our underwriting and the way in which we interface with various parties. Right? So going back to this not only being helpful for us, what I've been able to do is talk to family offices, talk to high net worth individuals, understand the way in which their own investment thesis interfaces with a ground truth view into companies, and over time develop a product out of that allows us to generate that much more value, right? And so again, the question isn't like, how do we use data for co-invest? It ends up being, how do we do everything in a deliberate manner that allows us to expand this as far as possible? And so that's why I think that's an interesting case study in how we build products internally.
Why do you think other venture firms don't do this, or they sort of see it as more of a craft than a product? Or what's sort of deeply contrarian here? How do you guys see the world differently than most firms do?
Yeah, I'm not going to go ahead and say that nobody else does this. I think people are trying, and I think it's unclear, right? We're in the early stages. I'd say we're in like the first or second inning on this, and despite the fact that we've been working 5-6 years. And I think ultimately everybody ends up with a different sense for what that base thing that you should focus on is. Right? I can count, numerous firms that use data for building these things. I think there are the obvious conclusions to jump through about where data is most useful when it comes to venture, some of which we described earlier. But I think for the rest of sort of the ecosystem, again, it goes back to that core challenge, which is when you have an existing institution that's built great success, had great momentum, and you have a culture / infrastructure that's there and sort of solidified to support that, how do you adjust that and shift? Right? In fact, this is not unique to institutions. I'd say this is something that all companies face. It's, how do you remain flexible and adjust? And I think when we think about product ideologies, a lot of times the products are the product of the team and infrastructure. Right? They just naturally arise around that, and there's a mapping between those two. And I think you can probably attribute a lot of the ecosystem, the way it operates, to that fact singularly.
Yeah, I think there's a thing here too where it's all the things Alex is saying around when you have success, and this is the classic innovator's dilemma. Why would you change? Your business is going to, optimize around serving its existing customers in the same, with the core products. I think that's kind of where you starting from scratch and maybe changing something from a business model perspective is where you might, in the long run, end up with innovation. Another thing in VC is when one venture capitalist finds wild success, it's kind of like a thing that now other VCs might see as a promising strategy. And it's not a bad idea because there's a lot of winners in the space. For example, with Andreessen's platform team, that kicked off a whole wave of VCs that are working with their portfolio companies in new ways. And I think the reflexive nature of some of this will make it kind of somebody coming out with a new approach might just be less common. that's not to say that others aren't doing this. Plenty of people are trying new things, but I think that this might be one of the reasons why you might see more of kind of that investor perspective.
Well, why don't you give a little bit of the landscape in terms of how other firms who are also very sort of product and data driven might see things a little bit differently? Like if you were to describe how Signalfire looks at things, or any other firm that you think is particularly cutting edge here, you probably agree on a lot, but where might there be a difference of approach or strategy if you were to sort of describe?
I think our main difference, if I had to peg it onto one thing, I don't think it's like our engineering ability, blah blah blah. I think it's the fact that you have product and engineering making investment decisions as basically in the room having those conversations. That's something that is really interesting at Tribe Capital. Is I can spend some time, maybe a week, I'm off figuring out how to build our Allspark system smarter so that we can do things better, and then I can ask somebody and require them to test it out for me, and then we can make that iteration. There's this level of fluidity across investing, product, and engineering that we have just in kind of the way we're structured.
Yeah, and to give some context, if you look, we're about 13 people, half data science, quarter product, and to give a true example of what Jake's talking about. Jake and I recently sort of co-led Carta's Series F, with Lightspeed, and as we were diligencing that, essentially Jake was iterating on the modules necessary to diligence that company as we diligenced it and as questions came in. And so you can imagine, the iteration cycles are much shorter when you have both the investor and the engineer as one single entity. And that's just simply not possible elsewhere. And when you don't have that frequency of iteration, the value that you can get from iterating on that part diminishes. And this is why, again, going to my earlier point, I think you see this bias towards working on sourcing and other things because they're contained sort of autonomous units that you can work through, that engineering teams can work through without interfering with the core function of a venture firm, which often lies in sort of diligence, deal making, that sort of thing.
One other aspect here is that the fact that VC is overall, I would argue, relatively nascent, and kind of the application of product engineering and iteration is pretty early. That the vertically integrated investor, if you will, is actually pretty important to make progress on a new framework, for example. And I think the analogy here is if you were to look at a technology company, this kind of organizational structure of product managers and engineers kind of splitting it up, and then you can go on from there, makes a lot of sense because people know how to do controlled experiments and A/B testing, and and all this such things that it makes sense to break it up and specialize and then horizontally integrate. But I think we're in a place right now, and I think VC overall is in a place where you need somebody to be entirely immersed, beginning to end, to really kind of see what matters and where to spend time.
Yeah, totally. I want to zoom out a bit. So over the years at Social Capital, I've heard a number of different terms thrown out. Obviously, capital as a service was one product. I think I heard Anvil or Antler, or there have been a number of these sort of internal products that were created, some of which you've sort of continued at Tribe. I'm curious for one or a few that didn't necessarily work. You don't need to give the specifics necessarily of the name or the project, but more just high level, you thought that this would give an advantage in venture, and for whatever reason it didn't or hasn't yet.
Yeah, I actually think that all those, you hit the nail on the head with the last statement. It hasn't yet. I actually think all these things are bound to happen at some point. I don't know how long it'll take, whether it's sourcing or I guess capital as a service, as you said it, which was an automated way to provide a green light, red light on an investment, sort of at the earlier stages, and remove the bias from it. I think it's a brilliant idea. In fact, I think one day it'll likely exist. In fact, we talk to many partners sort of on the debt side of things about how we might utilize frameworks like the A-ball to better underwrite opportunities in an automatic fashion. But I think the challenge there was, again, nascent team, we needed to put risk capital and sort of risk effort play in order to gauge where there was product market fit. And we were very much in the 0 to, not even 0 to 1, the 0 to 0.5, right? And exploring what might or what might not work. And the underlying issue ended up being we just had to grind through a lot of the various ways in which we did every single part of that stack. One example was it was incredibly challenging to ingest data from companies while still maintaining trust. Obviously, we have a secret sauce for doing that today, but back then this was non-trivial, right? Another example is we were attempting to build a green light, red light model and do the feature engineering around our models, but we didn't have the data quality necessary to support those things, right? Going back to what it means to have ground truth into a company. And so I wouldn't say those attempts were wrong, but we hadn't teased apart the DAG or the set of dependencies necessary yet for that ecosystem to evolve. I'd say like that is the core innovation at Tribe is I think we got lucky and figured out one thing that does seem to be central to all these efforts, which is why we're focused on that specifically now, as opposed to spreading extremely wide. And instead using partners to augment those other parts by empowering them to do what they do best with what we feel is the backbone of that.
Totally. I want to talk about sort of the inner workings of firm building, because you guys are doing a lot of sort of interesting and different things around, team composition for one, and incentive alignment. Why don't you talk about how you think about that internally?
Yeah, absolutely. I think the answer is we have no preconceived notions about what may or may not work. I think we have a healthy respect for the past and how things have been structured, but we use that as a means for understanding the constraints, why those decisions were made. And then we clear the slate. I mean, this is a huge, I think, call out to sort of Arjun Sethi, Jonathan Su, and Ted Maidenberg, the co-founding partners at Tribe. They were incredibly open about the way in which they even brought us on, right, as product folks and engineers. We essentially said, we don't know what form these incentives are going to take, but we will make sure that they are fair. And we will align them with this idea that a material amount of the value will likely come from focusing on engineering and product across these few key points, some of which we've discussed today. And I think it's pretty hard to have a reset of culture like that in an existing firm. I think there are strategies for doing so, right? We often build strike teams in our other companies. You have smaller pods that have more autonomy and the ability to set incentives and things like that. And so really that's how we describe ourselves and think of ourselves, right? We are flexible, not only about the products we build, but all the way down to the responsibilities we have in the way in which we actually compensate people for those things. And so, for each new hire that we bring on, we have a process where we re-examine that entire stack. We think, hey, this person's coming on. We want them to have a compounding effect on everything that we do. What is the right way to structure, salary, carry, responsibility, such that they are more than enabled to think freely, to feel empowered, and actually have the tools necessary to make some of these hard calls. Going back to the verticalization that Jake talked about.
Yeah, I think on top of that, there's this pervasive belief at Tribe that this compounding is in the long run, which is the way compounding works, is in the long run going to be the stuff that matters the most. And then how do you basically increase the compounding rate as much as possible? And how can you use team composition and compensation to achieve that? I think a lot of ways it looks, we kind of look like a startup where, there's a heavily strategic aspect where, you might have like somebody form the company, but allocate a meaningful amount of the ownership to people in the product and engineering teams. Don't get me wrong, we're definitely an investment firm, but there is that way of thinking, and that comes through to how the initial team was put together and how we're continuing to build it out that way, where you don't have to be somebody bringing in a bunch of deals or bringing in a huge amount of AUM to be somebody who's compensated equivalently, so long as you're having a compound effect. And I think that the tricky thing is you can't really measure that stuff. and it's really hard. And I think that there's definitely, and from that perspective, there's a kind of a bet that this is what we're betting on. We don't really know yet, so we're going to, maybe speculate a little, and we think this is going to work. And I think it's going to take a little time for us to be really sure, but that's kind of where it's coming from.
Yeah, and I think all the end result is you have individuals in the firm who are empowered and freed to rethink the way things should be. Right, going back to the example of an incumbent firm where you bring in product and engineering, it actually doesn't even need to be product and engineering. It could be a brand, brand expert. Could be somebody who's an advisor to a certain sector of companies. When you have existing momentum, an existing way in which you do things, and there isn't a structure in place to help people challenge that, massage it, iterate through it, what you end up getting is, parts of the organization that are beholden to that existing structure, and you will continue to build on top of that structure, and there's a natural evolution to that. So the question for us is, it's not really about having a natural evolution per se. It's about building as much value as possible. So how can we challenge these assumptions when necessary internally and let people do so in the most fluid and quick way as possible? And so, Jake said, we incentivize people who don't necessarily touch some parts of these organizations, but we actually have a fair amount of crossover even amongst that, right? And what that allows us to do is apply those same product and engineering methodologies, not only to diligence, which we spoke about, but also to the way in which we, for example, help our LPs, the way in which we help our companies, et cetera. And it's all the same, it can all be attributed back to the way in which we structure those teams, the way in which we divide those responsibilities and share those responsibilities.
Totally. When you talk a little bit about how you think about engineering versus investment team cadence, or even just focus across from sourcing versus diligence versus management versus operations?
Yeah, absolutely. In fact, this is a question that I got from somebody who was running a larger hedge fund who wanted to understand, look, like I'm trying to build an engineering team here that's going to be helping us, but I also want to focus on my investment activities. So how do I balance these two things in my firm? And the answer to that is 0 to 1 product development is non-trivial, takes a lot of time and effort. And if you really want to gain the most bang for your buck, you want to merge the two together so that you're, again, focusing on one thing that helps you do both. If there's one question that I think we ask consistently, it's, what are the key few things that we can focus on that allow us to accomplish all the things that we wanted to, because there's so much surface area. And I wouldn't say like I guess product people are lazy inherently, but really lazy is another word for just being focused and efficient. And so the answer that I give them is, look, like how would you merge those two so that you can then iterate faster and more effectively and spend 1 hour doing both? And the answer to us has been, again, what Jake alluded to. Jake's in there assessing that investment and acting as the sponsor for the deal while running the R&D necessary to make our modules fit that and provide better insights, right? And so there's no wasted work there. There's no division of labor. Focusing on one thing doesn't help one thing more than the other. And I think, that is one strategy. If that's not possible, then I think the answer is you bias towards one and you partner or buy on the other side, right? And we've found a fair amount of success with others who have a specific forte outside of engineering, where we're able to augment that with some sort of output. For example, the 8-ball. And then we have a conversation and talk about it. But I'd say, if you aren't able to find that common medium that empowers both, it's extremely challenging to do both. Just because we're human, we have limited time and resources.
I think there's also, I guess I'm not 100% sure of the context, but what is there a clear problem that you're solving right now with engineering? Like why engineering? Why now? But just going back to how we think about it, I love the way that Alex used the word lazy, because in some ways being lazy is the best thing for us, because if we're lazy, then we're forced to solve the problem. I think that a lot of our internal innovation actually comes from this place of how do I solve this problem once so I never have to solve it again? And how does, in such a way that pertains to making our investment decisions and portfolio management better. So, I think that's definitely in the spirit of what we do. It's in the iteration loop. That's, in my eyes, one of the biggest drivers.
Yeah, I think the funny part is every investor knows this internally. In fact, this is the basis for many investments, right? The idea that you can invest $1 and get compounding returns on that, right? Get more for your dollar than you put in. And so why not have that same philosophy across everything you do? I mean, I think that's just the greater point here is, we as an industry have existed for a very long time, and there have been many innovations in that respect. But, these things come in arcs. And I think for us, at least, what that meant was, hey, there's an opportunity here to rethink what it means to build a verticalized venture firm based around product and engineering, and to rethink the way our personnel do this, because we have had the same question that everybody else has, which is, how do I use data? When really the question we were supposed to be asking is, how do we compress and focus the efforts we do into a few things, data as a wedge into that allow us to provide a materially higher amount of value than we were able to before, and to build our product market fit within.
Yeah, I think there's a piece here of this getting smarter over time, and when you have a product in market and you can iterate on that product and improve it. I think that's a lot of what we do, and one of the ways that flows through is through what we were discussing. But one thing I think is really important that we actually haven't really gotten to, which is, we talked a lot about products, and we talked a lot about how we think about products and how we invest. But one of the things is behind a lot of these products are concepts and frameworks, which are a little disparate from the product itself. But, there is kind of like this other layer of how do we build our understanding and build our theses. And then there might be a stage of translating that into a product or a system. But that's certainly a really important part of our iteration loop that is a little separate from product, and we're not just we don't just build products. There's a lot of this other type of knowledge building happening on the side.
Why don't you talk a little bit about how you interface with partner firms and other companies?
Yeah, absolutely. So this goes back to that dependency graph of what people inevitably need in order to do what they do best. Right. Actually, we can talk about two examples of this: portfolio companies as well as other partners who are also investing. I think they're actually fairly similar. One of the challenges that that I've had as an operator historically in my board meetings and things is, again, oftentimes what you need is not only that strategic help at the high level, but sort of that air cover when it comes to truly understanding your business and finding the potential within that, right? The frameworks that Jake talked about. But in order to do that, your board members, everybody around the table that you bring, they need to be armed with an understanding of your company so that they can actually help you with those things. And that's non-trivial. In fact, it's non-trivial because half the time you don't actually know how to do that for yourself, especially in the earlier stages. And so I think what we do, and this is why entrepreneurs like to work with us, is we have a very quick and precise way of getting to that truth. And even within our board meetings, right, we're able to run these things quarterly, monthly, very easily. And we can say, look, like, this is how we interpret the ground truth that is your company. I'm happy to go to a dinner and explain how you function to a depth that other people around the table can use in order to help you. And that's the way in which we provide value, is setting that ground level that everybody can use to help you. And so, as Jake said, we share our research back when we diligence companies. And even at that point, these companies are able to use that to explain their companies to other investors, to other strategic partners. And those guys are able to onboard onto what it means to interface with that company that much faster and then provide their value in. It's the same thing with LPs, as well as other partners in the space. By just having ground truth about a company, whether that's from us or somebody else, they are able to then spend their time, right, focusing on what they do best. Maybe it's introductions to people in a region because they understand the business. They're able to spend the time to do that because they aren't spending 2, 3, 4, 5 weeks taking, 500,000 to tens of millions of rows of data and having their analysts or principal run tables. They're able to skip all that and trust in the ground truth, the medical chart, and then provide that value. And so I think that is sort of what we mean by what does it mean to provide a sort of backbone, core atomic value to an ecosystem. To us, that's that core visibility into how a company functions, and it helps across the board with everybody that sits around the table of a company.
One of the big philosophies at Tribe is N of one companies. Maybe gearing towards closing here, you can unpack a little bit how you think about that, how you measure that, or how you get comfortable there, and then also on how you think about building an N of one venture firm.
Yeah, absolutely. Yeah, so obviously, we love our outliers, our N of one companies as we describe them, and the concept is really simple, right? Every once in a while, you will have a firm or a company that happens to be in the right time, the right place, the right product, such that they are able to collect what we call an atomic unit. What do I mean by atomic unit? An atomic unit is this raw resource that, for whatever reason, when captured, ends up powering an entire ecosystem. So the canonical example we give is Carta, for example, right? Carta is collecting equity. On top of that, you get an ecosystem of investors, shareholders, companies that can all use value out of this. You get the ability to set up places to trade these things, etc. So you can see an ecosystem evolving around this. Not every company is that lucky, right? Oftentimes you'll find product market fit, but you won't necessarily have that type of outcome because there's a local maximum to what you can build using that as the fuel for anything else. So when we talk about N of one companies, we're talking about these category defining companies that essentially found one of these resources at the right time and was able to build not only their own product suite, but an ecosystem of other companies on top of that.
Just to add an example to that, because Carta is obviously an incredibly successful company. Is it a Google, right? Is a good question. So, a good example is also like Facebook, for example, where you would say Facebook is an N of one company because they captured the atomic unit of what we could say photo or media. And around that unit, they, built the world's largest social network. And the entire, advertising and all sorts of other industries and consumer interaction refactored around that type of approach. And it was Facebook capturing the unit, identifying that the value is in the connections, and then kind of dialing into that built the company that they are today. So that's like if you were to fast forward down the line, what happens to an N of one company? That I think Facebook is a good example of kind of what happens in the future. And I think the way we think about it is Carta is a good example of a company undergoing that transformation.
That's right. And so when we talk about building an N of one firm, what we're really talking about is a category defining firm that ends up interfacing with the rest of the ecosystem and empowering it, right? The point here isn't to push everybody out. The point here is to multiply the market, multiply the value being generated by being the center of it. And so, a lot of what we do is think about, one, investments that we can make where the company will inevitably, hopefully, become that center of the universe and make those markets that much larger, essentially market creators. But internally, we also think about that for ourselves. What are the few key things we can do to help the entire venture ecosystem, as well as the adjacent players, both companies as well as investors, such that we continue to have these compounding effects and we continue to elevate the things that everybody else does. And so, data is one wedge into that. And right now, our atomic unit is visibility in these companies. And what that's given rise to, right, are these frameworks around N of one. The ability to partner with companies and firms that have strong networks that want to introduce those networks into our combined network of companies. Like that's the type of collaboration that we want to build. And we are singularly focused on sort of this core 8-ball AllSpark, as well as the adjacent products on top of it, as a wedge in to explore what it might mean to build an N of one firm around that specific concept.
Yeah. Give more examples of Facebook is easy to see, Carta is easier to see, like of investments you make and how you think about the N of one behind them. We have a co-investment in Muse. I'm curious what you think the N of one of that the atomic unit could be, or any of the other sort of recent investments.
Yeah, absolutely. I think Muse is an interesting one. For those that don't know, Muse is an incredibly expressive way to not only message but sort of generate content as a whole. And I think there's sort of this prevailing arc. Actually, a great example of this is GeoCities back in the day. I'm sure everybody remembers that. I think there was a huge sort of arc of creativity that came with the emergence of the internet, right? Things are much less uniform back then. And over time, you see sort of that decentralization move to centralization, right? Activity getting concentrated on places like Facebook, Instagram, etc. Creativity with constraints. And I think what you're seeing in sort of earlier generations is this desire to expand past that and to build a sense of agency, a sense of identity. And so in the same way that these networks historically have been generational, our bet here is that there is a space and place for collecting this atomic unit that is the current creativity within this generation, right? And how information is transferred with that energy in mind. And I think it is inevitable that that'll centralize over time and become more constraint oriented. But I think we're potentially at the beginning of a new arc. And that's why, I think Muse is obviously very early, but it is incredibly compelling in that respect. I think the other one that's interesting to talk about is this company called Bolt. At its surface, it's a checkout experience. But again, like going back to the N of one concept of finding the right wedge at the right time and collecting something that's valuable, they fit all that criteria. They're a little earlier, but essentially what they found is if you look again at sort of these centralization versus decentralization arcs, you look within e-commerce, what you have is this great centralization of certain types of purchasing into Amazon in the head, a centralized solution servicing SMBs at the tail and torso, that's Shopify and some of these other services. And then you have this entire middle tier who has realized that they don't want to be swallowed by Amazon. These are brands, family of brands, that they want to continue, I guess what you would describe as the spirit of entrepreneurship. This is the same thing that those kids are feeling about Facebook and Instagram, right? The ability to stand out, have your own agency, have your own identity. And they're wondering, hey, what am I going to do about this impending centralization across the board? I want to remain decentralized and self-sufficient. And so what you have is this entire decentralized ecosystem of things servicing e-commerce. And the end impact of this is incredible integration complexity when it comes to integrating all these things together. I tell a lot of people this. I ran product for this residential contractor platform. At the time, I think we had something like 600,000 contractors across North America, and we're trying to deploy payments into that ecosystem. And it took us on the order of 6 to 9 months just to deploy a solution. And not to mention, we didn't even get to the point where we were normalizing data from all this purchases. So what Bolt's done is provided a checkout layer, right? But they've also been very smart. They've realized, hey, there's this entire ecosystem of things that just don't play nicely together, but are ultimately necessary for helping the torso essentially preserve their agency, preserve their decentralization against sort of this centralized threat. And they've provided middleware that helps everything connect in beautifully. That really impressed us, because essentially the future that Bolt can have is, they hit at the right time when there's an absolute need for these things. What they end up doing is becoming potentially the backbone for the torso of e-commerce, because they're able to connect and elevate all these companies in the space that are having challenges sort of integrating with each other into a cohesive solution within each of these brands. And so, that's the way in which I guess this is a testament to our 8-ball and some of the focus on making the earlier parts faster, the product market fit and engaging with that. Because we're able to do that quickly, we're able to, spend our time thinking about some of these frameworks on top of that we layer on top. And the hope here is, people are able to do the same when they have ground truth in their company in the way in which they form their thesis.
I think one thing to add about N of 1 outcomes is that it's one of these things where after it happens, everyone's like, of course, but before it happens, it's very hard to see. You can look at signals in kind of product market fit. Like, for example, I guess we're talking about Bolt. So, for example, with Bolt, there was a ton of growth at a TPV level that we didn't really see maybe in some other payments companies that we had looked at. So it seemed a little weird, a little different. And we kind of put together a thesis for what it was, but we didn't really see that aspect that Alex described. And I remember that Ryan always had that perspective. And now, like, as things have developed, you can kind of start to see that materialize. I think around N of 1, it's really tricky because, we try to come up with a framework to say, okay, there are atomic units of value. And if you follow this line of thinking, you should be able to identify them. Even if you have product engagement data, you can see special things happen and there isn't an N of 1 outcome because you hit a ceiling or there's not a future inflection point that leads to acceleration or something. So, it's really tricky and they're very, very rare. An N of 1 company, happens once in a while, almost by definition, once every maybe like decade or so. And so, that's kind of the thing you're up against. It's not something that you can say, oh, I found it, I can see it. It's really, really tricky. And even when you have all the ingredients, you don't really know. And that's just an important thing that you can't be overlooked.
That's right. And so the trick here is, we aren't seers. We don't know, right? But what we can do is increase the probability that we're right. And the way in which we do that is at least understanding whether there's early product market fit. Because I can tell you for sure, if you don't have that at some point, then the chances of you leveraging whatever energy you have to build those outcomes is null. Right now, there are instances like Slack where you don't have product market fit with your original product, but then you suddenly find it. But that prerequisite is always there, and that is you have sort of this uncanny energy that is then transferred into sort of a greater outcome. And so a lot of our efforts are around at least filtering out in that respect. And that's why, we like doing that versus say sourcing or whatever else, because ultimately sourcing doesn't give you as deep a sense for that specific checkbox. And we think that specific checkbox just happens to be very valuable for a lot of things. I think as that matures, there'll be other things we can build on top of it that help us more accurately identify which companies are on their way to N of 1. But for now, I think the thesis here is if we can do that well, then we can increase our chances and we can spend more time thinking about these outcomes and helping others think about these outcomes on top.
Yeah, that's a perfect place to wrap, guys. Alex, Jake, thank you so much for coming on the podcast. We highly recommend entrepreneurs and other investors work with Tribe. We certainly do and have a co-investment. Looking forward to more. Alex, Jake, thank you so much for coming on the podcast.
Yeah, thank you, Erik.
Appreciate it. Thanks.
Yeah, and any more plugs? Where can they learn more or read more about your work?
Yeah, absolutely. You can definitely reach out to us. My email is alex@tribecap.co, and then Jake's is jake@tribecap.co. You can also visit us at our website at tribecap.co.
Awesome.
If you're an early stage entrepreneur, we'd love to hear from you. Check us out at villageglobal.vc.